Foreign businesses in China are less likely to disregard fraud than in the past. The speed of economic growth in the country previously detracted attention from cost savings, but now a more competitive market means businesses need to build stronger anti-fraud programs to protect margins and improve efficiency. The local business culture in China certainly calls for vigilance, and because PRC laws and regulations notoriously leave much room for interpretation, local businesses are used to operating in the halfway between right and wrong. But before foreign businesses invest time and funds to implement anti-fraud programs, it is vital that they first gain a good understanding of the types of fraud that their specific business is most likely to be exposed to. Which begs the question, what are the forms of fraud most commonly encountered by foreign companies doing business in China? Well, if we're talking about financial statement fraud, income understatement, in other words, the artificial deflation of a company's income figures, is still today a widespread form of economic crime in China. A common motive for income understatement, of course, is corporate tax evasion, which can have a dire consequence on the company and its top management, given the ongoing crackdown on tax evasion in China. Indeed, the company's legal representative, often a senior manager at group level, can be held personally responsible for the malfeasance of the company and face prosecution here in China, even if he or she plays no part in sanctioning the scheme. Conversely, income overstatement, which involves the artificial inflation of a company's income figures, typically through fictitious revenue recognition, is sometimes also a concern. With many companies impacted by China's changing economic climate, reaching the performance targets set by the overseas stakeholders is becoming increasingly difficult, which acts as a motive for income overstatement. When talking about corruption, conflicts of interest is arguably the most common type of fraud that foreign businesses suffer from in China today. It often takes place through fraudulent purchasing schemes, whereby the local management purchases products or services from a company owned by a friend or a relative. As such, it is imperative that thorough background checks be performed before selecting any important supplier in China. In certain industries, bribes in various forms, gifts, hongbaos, dinners, etc. are still sometimes used by the sales team to facilitate business deals. However, we do see that such examples of malfeasance are less frequent than in the past, as corruption in its most obvious form is increasingly condemned across the Chinese business environment. A more common example of bribery in China nowadays involves the local management receiving invoice kickbacks from suppliers as a reward for their loyalty. Finally, many businesses in China suffer from asset misappropriation, which for a trading or a manufacturing company typically involves theft of inventory. In China, this type of fraud often takes place through false sales and shipping, with the theft of inventory accomplished by conceiving fictitious purchase orders. But other strategies exist. Recently, after investigating a whistleblower's tip, we uncovered that the local sales manager of a medical devices company in Guangdong was stealing large amounts of free product samples. Instead of sharing the samples with prospective customers as instructed, the salesman would sell the samples on e-commerce, thereby embezzling over 100,000 RMB's worth of merchandise. The misuse of intellectual property is another form of asset misappropriation that is common in China. The misuse of IP typically involves members of the local team using their headquarters trademarks, for example the brand name or the logo, to negotiate side deals for their own business. We've recently seen the general manager of a foreign company set up a separate China-hosted website in the name of the foreign brand and use the website to help facilitate the signing of several major contracts with customers for his sole personal gain once again. Fraudulent disbursements are another liability to look out for in China and typically involve unsanctioned payments made to staff and suppliers. We've also seen cases where fraudsters conceive fictitious suppliers to channel money to a company or a personal bank account. Also very much relevant to the China context, expense reimbursement schemes are sometimes utilized by fraudsters, and by overstating expenses, they are able to increase their personal remuneration. Last but certainly not least, when duties are not properly segregated at the Chinese subsidiary, a real risk arises that an opportunistic employee could steal company cash undetected. For instance, if the person who holds the company's blank checks is the same person who holds the company chops, there's a real danger that this person uses the chopped checks to withdraw funds from the corporate bank account. Likewise, theft of cash may happen through e-banking transactions if the same person both initiates and approves e-payment requests. At the end of the day, every business is unique and its fraud prevention must be tailor-made. While some companies are shielded from certain types of fraud, they are more exposed than average to other forms of fraudulent behavior. Thus, a self-assessment is absolutely essential to understanding the mechanisms of malfeasance potentially at work at a company's Chinese subsidiary. Once the prevalent risks have been identified, stakeholders should strive to construct the appropriate internal control mechanisms at their Chinese subsidiary to mitigate those risks and prevent future harmful disruption to their business.
Thank you for viewing this episode of Des and Shira's vidcast. For further information and to stay updated on the latest news and insights on doing business in Asia, please visit our website at www.deschira.com.